Welcome to Tracking Stocks, the channel where we apply the proven trading strategies of William O'Neill, Stan Weinstein, and Mark Minervini. We don't trade on emotion. We trade on price, volume, and data. Today, we're looking at an explosive semiconductor stock that just reported earnings. Rambus, ticker symbol RMBS. Rambus broke out of a cup pattern back in July, around the $67 range. The handle was subtle, only visible on the daily chart, but it was there, and volume confirmed the move. Before the breakout, Rambus averaged roughly 1 million shares a day. After the breakout, volume routinely doubled or tripled, a clear sign that big money was stepping in. At Tracking Stocks, we study volume action in addition to price, because volume is the hidden footprint of institutional investing. When large funds begin building a position, they can't buy quietly. Their demand shows up in the tape. Those heavy volume spikes on up days are the clues that tell you the next big move may already be underway. Most retail traders chase headlines, but smart traders read the footprints. The volume reveals where the professionals are placing their bets, and that's where we focus our attention. If you learn to recognize that accumulation before the breakout, you'll see what others miss. The clues were there all along. They're written right in the volume. Rambus rallied all the way to 109 on September 23rd, then corrected down to 89 by October 10th. Volume contracted during that pullback. Exactly what you want to see in a normal, healthy base. No panic selling, no distribution, just a reset after a strong run. Then came earnings on October 27th. In the days leading up, Rambus surged on heavy volume, peaking just above 114 right before results. Earnings disappointed, EPS came in light, and the stock gapped down to around 95 at the open. But here's what matters. It rallied back above 104 by the end of the session. That's buying pressure. That's support. Now it's sitting below that 114 resistance area. If Rambus can rally back and break through that level on expanding volume, that would mark its second base breakout since the April 2025 correction. If the general market cooperates, we'll be bullish on that move. Now let's talk about the I in O'Neill's Can Slim. Institutional sponsorship. This is where the 13F filings come in. They tell us if the big funds are accumulating shares quarter after quarter. For Rambus, institutional holdings grew 4.4% quarter over quarter, 20% year over year, and 10.7% over the past 2 years. That's moderate growth. Not weak, but not yet the kind of acceleration that marks the next big leader. In O'Neill's research, the strongest stocks showed a wave of new institutional buyers right before their biggest moves. That's the silent vote of confidence we look for. Because when funds step in, they move real volume. Without that sponsorship, rallies tend to fade once the excitement cools. So for Rambus, the story is simple. Sponsorship is there, but we need to see it keep climbing. The next 13F cycle will tell us whether institutions are adding on this dip or backing off. Rambus makes high-speed memory interface chips, particularly DDR5 technology, used in AI servers and data centers. In the third quarter of 2025, they reported $178.5 million in revenue, beating estimates of around $175 million. Product revenue jumped 41% year over year to $93 million, and they generated $88 million in cash from operations, bringing their cash pile to over $670 million. But earnings per share came in light, 44 cents versus expectations near 63, and guidance for the next quarter was conservative. That's what caused the initial sell-off. Analysts are split. Some point to margin compression and slower licensing growth, while others emphasize Rambus's strong positioning in DDR5 and AI-related hardware. Several analysts noted that this pullback might be a buy-the-dip setup, especially given how fast DDR5 adoption is ramping in data centers. So we've got strong top-line growth, a healthy balance sheet, and a short-term earnings miss. Classic shakeout conditions, the kind that test weak hands before the next move. Thanks for watching. Make sure to subscribe and drop a comment below. Do you think Rambus is setting up for another breakout, or has it run its course? And remember, here at Tracking Stocks, we make unemotional trades based on rules and analysis. If the market has a bad day, don't ever panic. Buy according to rules. Sell according to rules. That's how you survive, and that's how you win.